Currently, Apple is at $221.89. Now, once it gets to around $221 and like 60, 50, I think my trade's gonna execute, right? And I already have a limit order in, and I had a limit order in this morning, but it was a little bit too far out. We dropped down to 220.37, and my limit order didn't execute because it was so far out. So let's look at the 15. And essentially, I want to make this video to tell y'all, like, before I get into all of that, I want to show y'all, the profit on each potential profit on each trade because it hasn't executed yet. But this is a 12/6 put, so you can say it's a monthly, and I'm up 84%, which is $670 on it, right? That's one. So I have two positions with this, right? My next position is an Apple put, and we are up 118% at $203. Now, this position is a little bit different because I started a position at around 300 and something dollars, rolled it over once it got very, very, very low. So I'm gonna need to cover actually I'm gonna take a loss on this one, like $100, but it doesn't matter. It's fine, right? But what I want to say to y'all is essentially, bro, everything that all this money that I made from this trade came down to one key thing. And all it was technical analysis. Like, if you can understand what the market is doing, you can legitimately print money, right? If you can understand what this stock is going to do or has a high probability of doing, you can print money, bro. It is literally that simple, right? So, for example, I'm going to I'm on the 15. I'm going to go to the 1 hour, right? And this is Apple from September 2024, the September 19th, 2024. And this is all the way up until November 1st, right? Now you can see that Apple's kind of been in a range, right? A nice little range, 221 to about, let's just say, we'll move it up here and say 237. But realistically, if we take out the gap ups and just the real market movement, we'll say like 234, 230. That's really where it's like been at. I mean, the highs is going to hit highs and then it's going to kind of average out into like a little median range, right? So a median high, that's what I like to call it. But the thing that I really want to reiterate in this video, and I really want you guys to like break this down and understand it, is technical analysis. Because without the technical analysis, you don't understand what's going on with the market. And yes, earnings come into play, but I'm going to explain to you why earnings really don't matter as much as a lot of people would say it would, right? So, for example, we'll go to the 15. Let's go to the daily. Let's see how the daily looks. I just was on the 1 hour. Let's go to the daily, right? And then let's zoom in. Actually, forget it. Let's just go back to the hour because most people are going to trade on the hour. You're not going to trade on like the daily. That's the daily. You have to have extreme patience, right? So if we look back on the time that I was saying, so from this is October. So let's look back a little bit further. Let's look back. We'll say October or September 30th, right? If we look back to September 30th, we kind of see that the RSI is very hot with Apple, right? Very hot. When we see the RSI hot, it cools off a little bit, right? And then you can see it being hot for a long time. So that means that Apple was trading very, very, very high, right? So if it is consistently this high, and even you can see it is above 47, which it is, you really want it, 47 will be a median, but if it doesn't really drop below that 50, like I'm gonna say mid 40s, it's never gonna really cool. It hasn't cooled off yet, right? So then all it's saying is that buyers are very strong and they're heavy in their position and they haven't kind of like, I'm gonna say, repositioned themselves, right? Because that's really what it comes down to. Like, a lot of this is just repositioning, right? So a buyer will buy in here, they're bullish on the market, it gets up to this range, and they might reposition themselves to sell off, or it gets up to this range, they sell off, and then reposition themselves down here. So if you understand what's going on with these highs and you understand what this technical analysis is saying, it's telling you that Apple was running high, where we were running high for a while, right? So from October 9th all the way up into basically the whole month of October, Apple was running very high, right? So every time you see it at this point, you want to get into some sales. You want to get into some sales. And all it is playing a probability game. I'm not telling you that it's going to work every single time. It's just a probability. You have a high chance of it going down when it's already so high, right? And you have a high chance of it coming up when it's already so low. And the market shows consistency. So the market shows, hey, 221 is consistent, right? The market shows, hey, 216 is consistent, right? 216 here, 216 here. Now, this is all based on ranges. It's not based on the exact price, right? So this bottom at 221 is a little bit lower at 220, but it's just based off a range. It could go even lower, right? It's really just based off a range. So with that being said, technical analysis really got me this money in this trade, right? So we could go ahead and execute this trade for, I think I'm not gonna push it. I'll execute it for like, so I already have a buy order in right now, a sell order in right now at 1500. I think I'm just gonna replace it at let's go 15 or 15. Let's go 1440. Should I go 1440 or 1450? Let's just go 1450. Who cares, right? So essentially, this is gonna be $1,500, 1450 coming back, right? So we're gonna go ahead and execute that. As the price comes down to about 221, it'll go ahead and execute. Now this one right here, I'm confident of leaving it in at 400. I know it has a lower expiration date, but I think let's just drop it down to 380. Let's just drop it down to 380. And the only reason why I'm dropping these down is because I want to put myself in something else. Because when you are trading with when you're kind of trading with these contracts that have expiration dates, your money isn't safe, right? It's not safe at all. There's no way, it's only safe when it hits the price point. But if it doesn't hit that price point, it's not safe. So what I'm doing with these wins from actually trading, swing trading, day trading, whatever it is, I'm buying covered calls in stocks that I could afford and I see some type of potential into, right? So don't look at this number. This number is not, yeah, don't look at it, right? But essentially what I did is I have 100 shares of Spirit Airlines, and all I do is sell calls, and I say, hey, this Spirit Airline price, it won't go up to 217 by today, which is Friday. And if it doesn't, I get paid the premium, which I did get paid the premium. And if it does, I got to sell my 100 shares of Spirit Airlines at $2, right? I believe that some of these shares have already sold, so I don't know if my cost average have went up, but no. Okay, so it's 185. So my average cost is 185. So if I sell at 2, then I'm making 15 cents per share plus the premium are already made, right? So regardless of the matter, my money's safe. There's no way I could lose money, right? This is where you want to put your money that you're making from these trades, from these swing trades and stuff like that. That's where I want to put my money in, right? Because these can go to zero, and they have been gone to zero many times. I literally lost $500, or it was like $400 off of this Apple put because I got in too early. I don't know when the market is going to do what it do. Nobody knows when the market is going to do what it do, right? That's why you want to buy contracts that have longer expiration dates, because the longer time, the more time you need, the less time you need for a trade to happen, the more chances you are to lose money. It is what it is, right? Like if you needed something to happen today, you're probably going to lose money on it. It's a very low chance that it's going to happen. But if you want something to happen over 6 months or a month or 14 to 30 days, right? There's a higher chance that it's going to happen, or it could happen, right? If you understood technical analysis. And I'll show you so many processes, right? So let's just say right here, I bought in Wednesday, September 24th, September 25th. Let's say I bought in and I said, okay, this stock is going to go up, right? It's at the bottom. I think it's going to go up, right? Because we basically gapped up from this point. So you're expecting this kind of to be some type of support, and we bounced here. So then you would assume like, okay, maybe I'm going to use this as a support line and take it to the top, right? This is Wednesday. Let's see, Thursday, right? This is Thursday. So, or this is Thursday. You had 1 day of good movement, right? 1 day of good movement. But if you held this for maybe a month, you ate all the way up here. you sold off on Monday the 30th. You sold off a week later, right? And it goes to show over and over and over again. Monday, October 7th, 2024. Here is Tuesday. Monday, October 7th, 2024, market closed. It skyrocketed up, basically gapped up, right? But you still left so much money on the table because Wednesday, October 9th, 2024, there was a huge gap up, right? Not a gap up, but price movement. Same thing here, bro. I probably bought this contract. Shit. When I bought this contract, I don't even know, bro, but it was like maybe like a week ago. And the smaller contract I bought a while ago, but the bigger contract I bought it like I may have bought it on Monday. What's today? Wednesday, Thursday. I may have bought it on Monday, but the other contract, the smaller contract, I bought it like 2 weeks ago, right? It was a 30-day. Monday, October 28th. That's too far. I mean, too close. Friday, we probably bought up here. For sure, I bought up here, right? For sure. If I sold down here, look at how much money I missed out on. Because up here to here is only like maybe like $80, right? 70, $80. But here, now we talking about, okay, we might be able to recover from our previous loss with our other contract. Because I just rolled this position over. Like, I could technically roll this Apple put over, but I don't believe we're going to keep going down. But all I did was roll it, right? So it says you don't have any available position because I have pending orders, right? But I don't want to cancel that pending order. But I could just roll this into a longer date. It will cost me a little bit more money, but I could just say like, hey, I want to extend this contract out and have a potential chance to make money on the later on down the line. And that's what I did. So like I said, technical analysis is so important. Technical analysis gives you so much data. Technical analysis helps you with being able to identify, okay, where should I buy these cover calls at? Where should I sell these covers calls at? Where should I put my cash secure puts in, right? So if I'm trading something like Spirit Airlines, right? My cash secure puts, I'm cool with getting in at 231 and I'm cool with getting in at 204, right? That's what my cash secure puts is. I would like to get in at 199. That's really my sweet spot. 199 would be where I want to get in and potentially maybe about 158. But then if we look back on the chart, right, we bounced off of this 231 here, right? So that's cool. I might want to get in here at 231 and ride that joint all the way up to $3, right? And then I could sell covered calls all the way up into $3. Once we hit $3, I'll sell it at, 310, or I'll sell it at 290 on purpose to collect a lot of premium and sell the shares and rinse and repeat. You feel me? So it's safe. Everything is safe. There's no way you could lose money unless you just don't use your brain correctly. But that's really all I got for this video, man. Today's a great day. Apple did what I thought it was gonna do. We're gonna make some good money on this, man. We're gonna make some good money on this, and it's gonna feel good. These are getting close to executing. I think this was at 380. Let's see. Yeah. So the ask is not as earlier. The ask was crazy. The bid aspect was crazy because of how much volatility was in the puts. Nobody knew how far they was gonna go, right? So, bro, these trades are money, bro. Absolutely money. I mean, if you look on a month, 1 month, bro, we went from 817 all the way up to 2000 simply with Apple and Spirit Airlines. That's it. Selling cover calls, buying cash secure puts, and then getting into these Apple puts and rolling my way through until it actually hits where I need it to hit. So that's the strategy, man. That's what I'm doing. 10K is coming soon, man. I think it's really gonna come soon. And then once we get to 10, we go 25, we go 50. Yeah, I might have something up my sleeve soon. So stay tuned. I'll see y'all in the next one.